Let's talk about C corporation taxes, no income. And so here's an overview I want you to really pay attention to. The big question here is that do corporations with no transactions or income, for that matter, need to file taxes? Well, you might be surprised to find that some of the most well-known corporations haven't paid income tax in recent years. In fact, they may even be operating at a loss, at a tax loss, that is. This includes major brands like JetBlue Airways, you have Netflix, you have Chevron, you have Dow DuPont, and nonetheless, they'll still have to file a corporate income tax returns, and so do you, even if your corporation didn't make a single business transaction. So corporations must file an income tax return with the Internal Revenue Service every year, even if the corporation did not have any transactions. And this rule applies to regular corporations, also called C corporations, and subchapter S corporations. And corporations formed under Section 501 of the Internal Revenue Code, which are tax-exempt entities such as nonprofit, may be exempt from this rule, depending upon the type of activity conducted by the 501c3 corporation. And tax-exempt entities should review Form 990 instructions to determine filing requirements in years when no business or income is actually transacted. Bottom line here is what? Let's talk about zero return filing. So if a corporation has absolutely no business transactions during the year and no income for that matter, it still must file an income tax return when it's normally due. So the corporation will submit what is commonly called a zero return. So to file a corporate tax return with no activity or no income for that matter, you will need to use the regular corporation income tax return known as IRS Form 1120. So this is actually distinct from 1120S. So 1120S is for S corporation, and Form 1120 is for C Corp, so C corporation. And Form 1120 instructions are the same for profitable companies and companies that are not transacting business. Okay, so you want to answer honestly. In the case of zero return filing, you will enter zeros on all lines of the income tax form to show no sales were generated, no expenses incurred, and no tax credits earned. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. One thing I want to say here is that when we talk about C corporation taxes no income, we actually mean either of two options. It can be no income. In other words, you actually have a lot of expenses, so you had losses, or you just had no transactions. Okay, in either case, you want to file. You always want to file. You always want to let the tax man know what's really happening with your C corporation. Now let's talk about due dates and extensions. So when you have no income and you have to file taxes, you still need to actually abide by the regular sort of a tax filing deadline. Corporate income tax returns are due on the 15th day of the third month following the close of a tax year. Let me give you an example. If a company uses a calendar year accounting period, the regular due date for the return is March 15th. If the company uses the fiscal year accounting period, the due date will differ. For example, a fiscal year corporation that ends its tax year on August 31st will submit its tax return on November 15th. That's actually, again, the 15th day of the third month following the close of the tax year. If a corporation files Form 7004 on or before the regular due date of the return, the corporation will receive an additional 6 months to file. So if your return were due, for instance, let's say on March 15th, and you don't file, you have 6 more months to actually file. You also have zero return filing penalties. One thing I want to say here is that there are some penalties. That's why I was just telling you earlier, it's always good to file. Even if a corporation does not have any transactions to report, failure to submit a zero return or request an extension by the due date may result in penalty assessments by the IRS for late filing. In other words, you are paying to not do business. The IRS can charge a minimum of $200 on zero returns that are more than 60 days late. And if the IRS assesses this penalty, it will also begin assessing interest on the unpaid balance each month. That's $200 can really rise real fast. Boss, I want to quickly remind you of today's topic. We are having a conversation about C corporation taxes, no income. Let's first talk about proposed assessments. So, failure to submit a corporate income tax return can actually result also in tax assessment and basically tax assessments by the IRS. So we're talking here about an audit of sorts. And so the IRS uses data from prior corporate returns submitted by the business or data from businesses in the same industry to estimate an acceptable income for the corporation's missing return. Okay, so remember, this is something that the law that Congress has actually empowered the IRS to do. So the IRS is allowed to perform these assessments under IRS Section 6020B. If the IRS performs an assessment against the corporation under this section, the company can reverse it by submitting its proper Form 1120, aka the zero return. Okay, and it's just that you do not want to leave the IRS with no news. That's just the bottom line here. And furthermore, if you don't file a zero return, you may miss out on certain grants, benefits, or aid when your corporation does actually resume business, right? Because there are some grants, there are some I would say some there are some subsidies, for instance, where they are asking you to provide your tax returns, your business tax returns for the last 3 years. And so if you don't have them, then you're really toast. Okay, so there are many reasons a business might not receive income. For example, if the business recently launched, the owner may still be in the process of finding clients or purchasing equipment. In other cases, no income is generated because the business is inactive, even if formal dissolution has not taken place. Whatever the reason may be, it's important for business owners to understand their tax filing requirements, which actually differ depending on how the business is structured. If you're a small business owner in California, for example, and your company had no income this year, you still need to file taxes at the state level too. Now there are some states where you don't have to file anything at the state level, but in California and New York, you need to file both at the federal level but also at the state level. Let me give you a few pro tips here. So the whole thing here is that, of course, we're speaking today about C corporations, but I want to quickly segue into LLCs. Are LLCs with no income required to file tax returns? So at least you can do a compare and contrast here. For income reporting purposes, there are three basic ways an LLC may be categorized. You have LLC corporations, LLC partnerships, and single member LLCs. So those are disregarded entities. So when we talk about LLC corporations, LLCs and corporations are distinct business structures. Okay, and however, an LLC may elect to be taxed as a corporation, as a C corporation, and alternatively, LLCs may elect to be taxed as partnerships. Okay, this is really important. So one thing I want to say here is that when we talk about LLC corporations, it is really mandatory for all corporations to file annual tax returns, even if the business was inactive or did not receive income. I think I've just established that. Very important. And the form that you want to file here is Form 1120. No 1120S or 1065. We're speaking about 1120. An LLC that chooses to be treated as a C corporation for tax purposes is required to file that form, okay, Form 1120. And if the LLC elects to be treated as an S corporation, that's 1120S. And taxpayers who file Form 1120 use Schedule K1, shareholders a share of income, deductions, credits, to report credits, deductions, and corporate income. The thing here is that when you file Form 1120, you don't have to actually you may receive or not receive Schedule K1. But the thing is, when you file Form 1120, you are subject to double taxation. It is what it is. Don't try to fight it. Basically, there are advantages. There are also disadvantages with a C corporation. So you basically, in this case, you are paying taxes when the company, the C corporation pays taxes when it files its return on from 1120, but then when it really distributes dividends to you the shareholder, you have to pay taxes also. So double taxation. Boss, I want to quickly remind you of today's topic. We are having a conversation about C corporation taxes, no income. Let's talk about LLC partnerships. So while some LLCs elect to be treated as corporations, others choose to be treated as partnerships. So if an LLC elects to be treated as a partnership for tax purposes and the business does not generate any income during the taxable year, it is generally not necessary to file a tax return unless there are business expenses to be treated as credits or deductions. And if so, it will be necessary to file Form 1065. So you can see here that there is a difference in treatments here. So if you are an LLC and you have not received any income, you may choose not to file a tax return. But if you are a C corporation, you gotta file a return no matter what. Okay, so this is a big difference here. Let's talk about single member LLCs and sole proprietorships. So if an LLC has only a single member, it is automatically classified as a disregarded entity by the IRS. Similar to a sole proprietor, a disregarded entity must report income using Schedule C. So here, this is profit or loss from business, or Form 1040. If there is no income to report, it is unnecessary to file Schedule C unless there are credits or deductions to claim. However, even if the taxpayer does not file Schedule C, he or she must still file Form 1040 if he or she obtained income from other sources. The bottom line here is what? Basically, whether you file a Form 1120, 1120S, or a 1065, you always got to ask yourself, are you actually better off by filing or not filing? In either case, in all cases, if you are a C corporation and you're filing with the IRS as a C corporation, if you had no income or income, whatever your situation, you want to actually let the taxpayer know about what's happening. Okay, do not actually go AWOL on them. Otherwise, this is really could be problematic for you. And also remember that when we talk about Form 1065, this is basically passed through. This is an informational return. Form 1120S is also an informational return. So you do not pay taxes when you file those two forms with the IRS. You do pay taxes when you file Form 1120. I want to go a little granular here, and I want to really detail more the filing requirements for corporations and partnerships without income. Okay, and because the situation can be a little complicated depending upon the states you're in, and also the regulations in that specific state. The tax filing requirements for corporations and partnerships depend partially upon whether the business is foreign or domestic. So a domestic corporation or partnership is an entity that actually does business in the state where it was formed. A foreign corporation or partnership is an entity that operates in a different state, or in some states, a different country from where it was formed. So let me just break it down for you. Let's say your C corporation is formed in New York, and you go to Illinois to actually do business, or you go to Florida to do business. So in Florida and Illinois, you are considered a foreign corporation. In New York, you are considered a domestic corporation. Okay, so as noted earlier, both S corporations and C corporations are generally required to file an annual tax return. However, exceptions might apply depending on whether the corporation is foreign or domestic. For example, certain domestic corporations may be exempt from income reporting requirements under 26 U.S. Code 501c3. However, as the IRS notes, a foreign corporation is typically required to file a tax return even if it has no income effectively connected with the conduct of a trade or business in the United States during the taxable year. And as mentioned earlier, it is not necessary for a domestic partnership to file a tax return if the domestic partnership neither receives income nor intends to claim credits or deductions. And even if a foreign partnership has no income, it is mandatory to file a return if the business or its U.S. partner makes an election, for example, to amortize organizational expenses. Okay. Now, if you have questions about this aspect of things, let us know in the comment section, and one of our team members will actually get back to you. Will explain things to you a little further, because this is a very interesting topic, but you need details to answer questions specifically. So the thing here is that you have to really understand. So should you file business taxes with no income? Is it necessary at all? I think I've answered this question pretty clearly, that yes, it is necessary. You do not want to ghost the IRS. You want to actually explain everything to them so they are clear. Now, one thing you need to understand here is that everything depends upon your setup too, though. Okay, let's talk about like how to file business taxes with no income. You really have to understand that you should not file if you are not actively engaged in a trade or business. You should not file if you are preparing to begin your business. Okay, it's one of those things where you have to always ask yourself, is it better to file a zero return form than not to file at all? Because again, if the IRS starts charging you if they start charging you $200 and they are charging interest on that $200, are you better off or worse off? Those are questions you need to really ask yourself. Okay, you can either deduct or amortize startup expenses once your business begins, rather than filing business taxes with no income. And if you are actively engaged in your trade or business but did not receive income, then you should file and claim your expenses. For example, you were paid upon completion of your work, and you should still file even if you haven't received income yet. And you can show a loss on Schedule C when filing taxes with no income to offset other income. It's one of those things where you got to see what really works for you, and also what doesn't work for you. In either case, if it makes sense for you strategically or economically, just hire a CPA, or you don't have to hire like somebody who is like sophisticated to really file a zero return for you. As a matter of fact, you can do it yourself. But it's one of those things where if you are in doubt, or if you have operational expenses you would like to write off while filing taxes, then maybe it's just better to actually enlist the help of a professional so that you are clear about where you're going. Okay, but either way, you want to file, and then you also want to make sure that you are if you have expenses right now and you think you cannot deduct those expenses, once you actually start making money, make sure to deduct those expenses. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about C Corporation taxes, no income. Let's do a quick recap here. So I gave you the overview, and I also give you a few pro tips, and then a bonus. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.